and ever since then, pretty much his trading success was phenomenal. So it'll be awesome to interview Joe after this. Alrighty, let's begin. You should be able to see my screen right now. And looking at the macro fundamental things, you can see here there's a lot of some reports who have an unemployment rate didn't actually, there's no increase or decrease in unemployment rates, back to 7.9. Unemployment rate in Canada dropped by 0.1%. I didn't realize the unemployment rate in Canada is pretty high too, based on the population. Right, and then we have in China we have a consumer price index in about 5 hours and 24 minutes time. Just to do a recap for today, in Switzerland we had also the consumer price index by 0.3, and then you have from what unemployment change right there, unemployment rate. And in Canada, unemployment rate 7.7. Oh, that's pretty good. 7.9. And unemployment change 236. Non-farm employment change, sorry. So that's a pretty cool stuff, which now led the market to go further up today as well. But before that, we'll go through looking at the dollar index. What are happy with the dollar index? So you saw from yesterday we had a higher high, higher low, more continuation, pretty odds. The market is definitely out of whack at the moment. I believe, even though it doesn't matter anyway what I say, based on our opinions, the market doesn't care. The market is pretty much out of whack. Sorry, I know it's superficial, but the market is the market. I believe whatever's pushing it is retail traders or uneducated and thinking that the market can go further. So we just have to be aware, be careful as well. That when the time comes, we have to short the marketplace to correct itself at least probably 67%, probably even 10%, right, into the downside as a form of a correction. And you can see here the dollar index is very, very strong. Odds and probability now to head towards about that 84 from what we're stating is highly probable. We are currently reaching the first level of area of supply at the moment, but the major bigger ones here about that 83.60 all the way to 84. The bigger time frame on the other hand, no, it's only the first week of March of February, very bullish. Technically speaking, from what I was stating earlier, from about December, before we wrapped up, March normally is a bearish month, but it hasn't been. And through cyclical patterns, March as well for the dollar index is also very bullish. But you can see it is currently bullish. If the market is in a more in synchronicity type of environment, then the market should, technically speaking, be on the downside, but this is not the case. Odds and probability, like I said, the market can continue to create a new higher high as well for the dollar index is highly probable, so we need to be aware, just be careful on what's about to come. Okay, let's go through that and have a look at the markets as well. Let's go through first looking at the S&P. S&P jumped today. It's not as strong as the Dow, which broke new levels, high levels. But we can see on the monthly chart, the bulls are currently still in control. We can't fight against the wave. Are they going to push it all the way to 1586? Highly probable. There's close to 40 points to the upside. First level of supply is approximately about 1550. And not long to go, to be in fact about just 8 points. Can they push it? Absolutely. To go to 1586? Absolutely as well. So from a higher high perspective, we're going to see stabilization, higher low. And if we in retrospect, about 1365 all the way to 11 to 200 points, it's going to correct itself also about another 200 points. So my take on it, create new highs and then higher low, then more higher high. Just too strong at the moment in terms of the bulls pushing it up. Weekly, you can see through there, nice and neat, stabilization, continuation. And then we have on the daily chart, we see here we have a hangman with a nice big push to the upside. There's a gap. They have to fill that gap somewhere sometime. So from a stabilization point, either you will continue or correct. Okay, let's go move to the next one, which is looking at the Dow. The Dow is very, very strong, as you can see, 1380 all the way through there. The bulls are in control, nothing dictating that the sellers are going to come in as yet. So we can't fight against that too. Weekly is too powerful after a higher high, higher low, continuation, higher high. You're going to see a round of steam probably, and then higher low, higher high. Okay. Looking at the daily, it is running out of steam, but there's still some more momentum. And so there's nothing trying to stabilize. We want to see more of a stabilization point of view. A lot of reportings overnight too. They town based in Italy, hence the cost base of the euro and the pound to drop, which was a pain in the butt. But it was perfect at one point. But what it is, the news is news, and the market will do whatever it wants to do. All right, so those are the things that we are going to be aware. As far as I'm concerned, there's more continuation of the bulls to be headed next week, unless there's going to be some form of a news that is going to happen next week to stabilize the market, but there's no sign, right? Okay, let's go through looking at the next one. Also, let me look at Bloomberg quickly. Up in Europe, yeah, the Stoxx 50, 1.4, 1.5, so pretty strong. They are all pretty much positive. Likewise, in the Asian market, the Nikkei has basically been very strong, created new highs as well. Hang Seng, very, very strong. S&P also has created pretty much new highs since the past a year or so. Was struggling to go above 5,000, and now it's above 5,000. So overall, the whole economy is still, or the whole global market is very strong, but there's nothing dictating in terms of weakness as well. But the problem is, it is currently out of whack with the currency markets, right? All right, so let's go through, let's scope the market a little bit. Any question based on the macro fundamental of things? Going once, twice, nothing. All right then. So
no questions.
No questions with that. Then let's go through looking at the euro against the dollar. Euro against dollar looks very neat in terms of the weeklies. We're in a good level of demand. Currently liking on what the pattern is currently doing. Much better actually. Now, if next week, if the low of this doesn't want to break, then this is going to continue pretty much to the upside. Where, firstly, midway 133, then all the way to 136 to create probably new highs. And on the daily, yes, we have a higher high, lower low, but currently from the closing price, we are sitting in an area of demand. But like what I said, once again, this is pretty much a fake out based on that breakout. Hence, that's why I don't like breakouts when the trend has still some more room to move, is because of this type of scenario. When much better if there's a breakout where the demand and the trend is actually meeting or breaking properly on the trend, that would be a better one. Hence, that's why I hesitated to basically go along with the euro against the pound yesterday. So they're going to fill in more on these levels, much better around the 15th, 16th to have a proper breakout through there. But if this one will fail, then this will continuation more of the downtrend to the downside. Right, M2, looking at daily, there is nothing dictating in terms of the setup. Likewise for method M3. So I wrote that on my notes yesterday that there is a probability that there's M3 setup, but no. So current from the closing price, it's back to the 8 to the 10. Hence, I believe they're just going through, like I said, around these levels, and then a proper entry once again of the 8 or the 10 will be tested. Alright, so that's for the euro dollar. No go, nothing, waiting patiently for that. Dollar against the yen, way too powerful, way too strong from what already stated since a few days ago. They were hovering just a certain price point about 93, and then boom, breakout. Even on the 95, now it's current 95.86. That 95 is a really good strong supply level. So we're going through a bigger time frame. There's no decrease in strength, so they're going to push that up now to about 97, 98, probably even about that 101. So there's a much better supply. This one's definitely broken, so we are going to see these levels being filled up. So no go, basically shorting, nothing. Weekly, too strong, too powerful. And then looking at a daily based on M1, still continuation, no decrease in strength. M2, nada, even though it's an overbought area, doesn't make any difference anyway. So what we want to see is some form of stabilization, then a little minor correction. Okay, at the moment though, it's really not a really good idea to short corrections because the trends are just too strong to the upside. Okay, nothing on M3, still within the criteria, still within the trend, pretty much heading back through there from 93.22. So more than 200 pips so far on M3. Pound against the dollar. These were basically entered yesterday. It was looking great, looking neat, and now it's back to the level of demand. This race basically was based on the news, on what happened pretty much overnight. And if we can go through that, I know the monthly is too strong still. Still continuation from the momentum of the force from last week. Who knows? By the end of the month it can go 51.45, and if we'll do that, then excellent, then we will be able to create a proper correction all the way 155. Can we make at least about 500 pips? Absolutely. But it all depends on what it will form on the smaller time frames first. We have a nice longer shadow here. So it is a great sign. They will feel this later on somewhere, but what I needed to see based on a shorter term time frame is a proper one. So the stabilization already happened yesterday, and you know, the stop was so tight I wasn't willing actually to go beyond further because it's still on a downtrend, but there is a probability that it could go and reverse, right, because good demand level. But didn't want to do that. Still pretty much sellers are in control. Gonna leave it alone for now. Nothing dictating to go long as yet. There was a potential M2. If it broke through 50.70, then we would have entered more, but didn't want to do that. Didn't want to play, right? So sellers are too strong. Likewise for M3, there is no setups. Right, dollar against the Swiss. Swiss is, or the dollar against the Swiss was also very powerful. Now, currently broke through there, nothing dictating either that it's going to fail. Next one now is approximately around this level. That high, these highs, they will be tested, and also around this area 97. I believe that in the next couple of months, they're going to push it pretty much still further to the upside. Bigger time frame, you can see through there nothing dictating in terms of weakness. Easy around the 97, probably even around the 99. We can go through that. Still pretty much in an uptrend from 011. Overall, still pretty much in a downtrend. I know that they will still fill in around to continue the trend of the primary downtrend to head towards around these segments, probably even to the end of the year. But it can go higher high, higher low, higher high. Alright, so we've seen weekly, the daily chart, still the bulls are in control. higher highs, didn't want to create higher lows, still continuation pretty much of the higher highs. Nothing for M2, likewise for M3, almost touched the 8, didn't even want to touch the 8, just currently rebounded, right? So it's still pretty much within the criteria, nothing going below that, except from 91.70, so 430 pips so far to the upside. Alright, Euro Swiss, briefly, 23.68, 125 will be the next target point. Okay, I reckon continuation now to the upside movement, higher highs, create a new higher lows, next new higher highs. Odds and probability definitely will continue to do that, is highly probable. Close to 200 pips and beyond will be the target points for the euro against the Swiss. Daily chart, now it's trying to stabilize itself after a few days of running to the upside. Still though, still pretty strong, and from stabilization, probably small correction before a continuation. It's M1, M2, nothing, getting to the overbought. M3, there's a big gap from the current price, from the actual moving averages, so 100 pips approximately. So if it'll correct itself, even better. So a nice clear breakout now from that short-term downtrend, which is just a correction pretty much. So the odds and probability that if you come back down to create new higher high, higher low, then higher highs is highly probable. Right, Aussie. This is also one of our favorites, pretty much. Now looking at the weekly on M1, much better. It was too expensive around 102.94, so currently much better price around the buying area. We have a new support base around this point. 1111, so 120 pips as a support base in terms of the trend. Now we have a higher high here, we have a lower low here, and also sideways movement since pretty much June. Good demand. Can it head towards the 105, 1060? Absolutely. Like in terms of continuation of a sideways movement. So you can see here, law of your angles, right? For those who know. And look at that. Just perfect. Then if it continued to head back up by April as well. Good. And it's kind of odd because normally with the Aussie it has a high about 80-90% correlation with the Dow. Unfortunately they didn't want to do that, and the reason for it is gold doesn't want to perform either. Gold is currently tanking. See right there, but it's in a good demand. Right. The lows didn't want to go this low. There's an uncertainty, nice long tails at the moment too though. It's in a level demand. I'm more prone for this to head back up to create a new lower high, 1631 at least, and head back to the downside. So hence, if it's just the way it's performing this way, then the odds and probability that the Aussie will rebound is more than likely. Back to the demand. Nice. So the risk is not too bad. We can choose also the lows from here, which is not a problem, but the big area of demand is actually pretty big from that support base. These are all based on news a few days ago with the Aussie against the dollar. So they're supporting around these levels. This will be the lowest of them all. So just bear with me for 1 second. The ESTE. Alright, so that is a favorite. Aussie against the dollar. That's pretty much done. M1, M2, there is nothing. M3, nada. Alrighty, there is. Now I want the price to close above in approximately about an hour and a half. Closing price 102.33.8. and the 10 is 102.31. So it is currently meeting the criteria, both of them at the moment. So as long as the price will close above 102.31 odd something, 31.2, then gonna pretty much enter based on M3. Awesome. Right. Let's see. Dollar CAD. Alrighty, based on the dollar against the CAD, now we have a nice that V formation right there. The highs didn't want to supersede this high. We have an uncertainty pattern. Stabilization. This is just mainly the stabilization point of view. Minor correction before continuation. Okay, just to fill in as well within the trend. Primary, secondary, tertiary. So currently squeezing at the moment in terms of that is just perfect. Highs, there's just probably a little bit more room. Can they fill this in? But if they don't want to, this is gonna go bam all the way there, which also meets around the 101.60. It's about 180 pips to the downside if it chooses to correct from the 123, and if it doesn't want to do that, it will fail pretty much back to parity. But so far, so good in terms of that. We're in the supply. Can they push it as well to 104? Yeah, definitely they can do that too. So looking at M1, look at those lows, and it's just sitting through there. Okay, so they are definitely the odds that they will go through and fill that to the downside is more than likely as well. M2, there's nothing, but there's also clear divergence now, pretty much pointing to the downside. So there's still the probability that it may drop. Alright, on M3 there's none, it's just sitting perfectly above the 8 10 at the moment, so it's still meeting the criteria. The Kiwi was also nice at one point in terms of a cheaper price. If I compare that against the Aussie, then Kiwi will be the cheapest, much better price of entry. 81.85 to risk approximately about 20-30 pips is very, very small. Risk is very, very small, with the probability to head back up around the 84.50 once again, more than likely. So they tested the price through here. A lot of selling pressure there at the end. So at least they retested the supply level just to see after 3 weeks pretty much in a row. If the low doesn't want to continue below this low and continue, then we have an M2 right there. And based on the daily though, we have the sellers currently in control. We just have to wait. By Sunday, we need to see that there's going to be some stability. Awesome, and especially on the smaller time frame, then great. But it's definitely in the demand level. Alright, if you go in the weekly chart, voila. So there's a potential as well, M2, approximately about 8.3, so about 100 pips. It's way too far from the current price, right, in terms of the entry. That's why M1 will just be perfect on the level of demand at the moment. So odds and probability that this is going to rebound is more than likely to happen, despite being on a very, very bearish right there. So good demand, 81, 98, 82. The risk is actually very, very small. Right, M3, none. So didn't want to create an M3. Currently failure. That's why Aussie is much better, as long as the price will hang around that area in about an hour and a half, then perfect. Right, Euro against the pound. Let's go through first through there. Right, basically Euro against the pound, it's also the same. In terms of the highs, they don't want to supersede 88. Stabilization, can it continue towards to the upside? That's where we need to look at the monthly. Nice big push, a lot of momentum, so there is nothing trying to retest about that 88. Can it go all the way to about that 88.48? We already did, and I wasn't feeling into that. It all depends on what you'll do by the end of the month. If the highs doesn't want to supersede all that highs, then we're going to see a correction to the downside. But as you would know, pound is currently very weak at the moment. Right, M1 on the daily chart, from the big push from yesterday, stabilization. Odds probably in terms of continuation to the upside is more than likely. Much better price around selling is about at 88. If the price is going to go above here, then great, even better. But so far the bulls are currently in control. We can't fight against that, but because of that hanging man formation, then yeah, there's some form of a correction time, and if so, then we're gonna have an evening star pattern by next week as a form of a because they're battling at the moment. Is this a fake out? If it is, then this will fail, then it will come back all the way to 86 or 85, probably even 84.50. So nothing on that, just gonna be waiting, but based on M3 back pretty much to the upside. Right, euro against the yen. Too strong. Breaking out, so clear based on that. So these are pretty much on my notes. Here we were struggling, didn't want to, so they pushed it all the way back up, only 126. Odds and probability that it will continue to keep going actually is very, very strong. From the higher high, higher low, that is it. Didn't even want to go to 114. Because there's nothing based in the past in terms of, if we're talking the fibs, this is, yes, the biggest of the trend, but here. 1723 was also the number I was looking for. I didn't even want to do that. That here as a demand was it, about 118.90. That is pretty much it. Alright, let's go through M2, none more bulls in my point of view. Likewise for M3. So from that entry, 121.83.94. Wow. 121. That was so strong. 300, almost 300 pips. Okay, pound against the yen. Let's go through looking at pound against the yen. Same, bullish. More continuation back to 147. This is actually also a trade that basically didn't want to, just basically hopped out with a small profit because on a small time frame it didn't want to play. It was too strong holding the price at the level around here, that 140.60. It was a good one. The reason for that, if I currently look into the trend around this spot, but didn't want to play. It was hanging around this level back in the demands, and hence just gonna get out because the bigger time frame, the bulls are just too strong still. From the higher high, higher low, yeah, no more, no less. That's all it can give pretty much. It went all the way to 144.70, right? These are all good supply levels. Sellers push it back down here though. Good upper shadow. They will retest that next week. M2, there's nothing in terms of setup. M3, from that buying 141, there goes 220 odd something pips. Okay, look at some exotic pairs very briefly. So pound against the Swiss, yeah, it's okay. There's nothing here. That's still pretty much now back to the bearish area. So from here, 139 when we entered, 142.50, target's been reached. And then Aussie and the Kiwi, too strong, right? Turns to go 142. If it breaks through this one, then bingo. This is back to about the 127. But if it doesn't want to, still continuation pretty much to the downtrend, with the Aussie again is a Kiwi. So the daily chart, the bulls are in control, creating new higher highs, and then retest around at 125. Then I'll be thinking of actually really shorting this further to the downside to continue the trend on the bigger trend. M2, there's none. M3, nothing. Right, so my trade pretty much for today is what I'm looking at is Aussie against the dollar with the condition that it has to finish by about an hour, and so I need the closing price to close at least about 102.31. Any questions for me?
No questions.
No questions. Great. Then, if no questions, then let's talk to Joe. Joe, are you there?
Yes, I am. Let me just move over into a different room here. 1 second.
All right.
Okay, I am here. Can you hear me okay?
Yes.
Okay, so let me know if you guys can hear me.
Alrighty. So,
Okay.
Joe, I've known you since 2008, right? Since OTA, pretty much.
Yeah, well, we go way back. Before kids.
And so, Joe, tell me, how long basically now that you've been trading? Just pretty much for...
Well, it's been off and on. I've been trading probably, as far as I started off with stocks and futures, since 2008. But really with Forex, off and on since about 2010, 11-ish, somewhere around there. I think that's just over the last 4 or 5 months I really started to get serious into it and make it more of a priority for myself.
Nice. So I'm just writing some notes, right? So you made it as a priority. Okay, so why did you choose currencies over stocks and futures?
Well, you know, I had a pretty good instructor named Ronaldo who said, Joe, get the heck out of stocks and futures, and Forex is where it's at. And, you know, long story short, I think that Forex, number one, gives you leverage. Number two, they tend to trend a little bit better than I feel that the stock market does. There's just too many in the stock market. There's too many stocks to pick from. There's too many options, too many choices, and I'm a person who likes to keep it somewhat simple. And I think that's what drew me to Forex.
Nice. So simplicity, right? Okay. So what were the challenges that you faced during the first times that you were learning currencies?
It's the same mistakes that I made with stocks and futures. I think first thing is one of my big flaws, I think, starting out was being predictive. I tried to predict where the market was heading and maybe was not humble enough to realize that, you know, the market's smarter than I am and the market's going to do what it wants to do. And I believe my early failure in my learning curve was that I was being too predictive. And then I think the second aspect would, I don't know how to correctly phrase this, but I think I didn't treat trading with the proper respect. And what I mean by that is if you have a goal and you don't really put forth 100% effort, you're never going to get where you want to be. You got to have that fire and desire to achieve your goals, no matter what you're doing in life. For me, I was treating trading as a hobby for the longest time. Granted, I do have 3 kids under the age of 6. I do have a day job. I'm in the central time zone, so I'm 2 hours ahead of California time. So I wasn't really, for the longest time, treating trading. I was treating trading as a hobby, not as a vehicle for wealth and as a subject like I would in college if I was in a college course.
Oh, nice. And then so, because what year when you basically joined ESTE anyway with me?
2011?
Yeah, 2011, right? 11.
It was either fall, yeah, I think it was fall 2011, late fall, early 12. But then when I hopped out for a while to concentrate on Oracle, and then I got serious again in November.
Correct. November of 2012, right?
12. Correct.
And then we had a conversation basically December 10, to be exact. I was in New York. No one was in the room. It was just Ann and myself. And then you had, prior to that though, you were asking some questions. You know, I did this, I did that, it's not working. And if you could remember, what was the question during that day?
Oh boy. For me, it was, I mean, I had a bundle of questions. I was an emotional mess. No, but realistically, I was over analyzing my trades. I didn't know, you know, when you place the trade, I can find entry points, but how do you manage the trade once it's on? Profit targets, as well as, you know, so I, you know, as anyone does, you know, you have your M1, M2, M3. I have my favorites.
Yes.
There's some that I was using that for some reason didn't seem to be profitable for me, and I felt that, you know, I owed it to myself to keep sticking with those, even though they weren't hitting for me for some reason. So for me, it was lack of confidence, over analyzing each trade, and then letting the trade run. I tend to take my profits too early and let my stops get hit, or even at some points I have my stops too tight. And there's nothing more aggravating than watching your trade get stopped out, only to see that trade immediately reverse and go into the direction that you were trading to begin with. And so after that therapy session you gave me on December 10th, you know, I think I've improved quite a bit.
Quite a bit, man. It's magnificent, right? So something clicked. What was that? And that's what I'm actually very curious. So what happened? After a conversation, December 10, we look into one trade, and I can remember very clearly it was a pound against the Swiss. But prior to that, no, we entered one more. It was a pound against the yen, I believe it was, right?
Yeah, and you said, okay, this is fun money. Let's take one lot.
Yes.
And we're going to say, just do one lot and let's let it run, and it's either going to hit this goal point, it's going to hit this profit target, or we're going to lose a lot of money.
Yes.
And sure enough, it was almost like, it was almost, not that we're being predictive or not that you're being predictive, but I think that's what kind of clicked as far as trend, and where I was in viewing the overall trend in the larger time frame, and where the point is where the trend will break. And I was really trying to be pinpointing it a lot more, where the bottom's going to be and where the top's going to be. And based on that example that Ann and you set for me, was it the pound the pound yen, or I mean, the dollar yen? I'm not sure what trade that was, to be honest. We placed that trade, only one lot. I wish I would have put 20 lots on there, because within a couple of days, what would have been my, you know, if there's 3 targets, this would have been like target number 10 to achieve, because it was so far out there was hit. So from there on, I think you saw, I became much more a student of the game, and I'm still needing to improve. I'm not here to say, and I'm here because you asked me to say that I'm a professional trader, because I'm not. I'm a student of the trading. I'll always be a student of the trading. But you know, I think what clicked for me is a couple things. And if you want to interrupt me, because I can talk for hours, you know, doing your homework. I think a lot of people like to just, okay, oh, wow, look at the setup, let's click it, let's buy it, without going through the steps that you do, like you did today in the Friday session. And then when you do find that trade, after, you know, checking FOREX, factoring, checking the corresponding markets, to actually fill out that trading worksheet that I did for a long time, and justifying why you're in this trade, how you feel before the trade, in the trade, and after the trade. And by doing that, as much as it may be, as we might want to skip that step, I think for me it was kind of like the voice in my ear, you know, the guardian angel saying, okay, have you crossed all your T's and dotted all your I's? And I think that's really put a little bit more structure in my trading.
Yeah, and not only that though. When you say being meticulous, right? So ever since you've been meticulous with your analysis, that's also helped a lot in terms of your success.
Correct. I would definitely agree.
Okay. So I hope you don't mind. Do you mind if I share in front of everyone basically what you emailed me in terms of your stats, pretty much for February?
For February, sure, you can do March. You can do whichever one you want to do. I got a good trade going on right now.
So it basically, here's the email that you sent me, right? So
yeah, I'm not by a computer right now, so you can kind of walk me through it.
Gotcha. Yeah, you're not in the computer. I've got the screen, and everybody will be able to see it. Like for February, you had 16 wins, 8 losses, 66.66 points in terms of win-to-lose ratio, percent. Total pip gain, 1526, 16.2% with average trading less than 3% of the euro account. Perfect, right? And you're just following the rules, and then basically stated that for March, you're going to increase a little bit more in terms of your money management. And then pretty much about a few days ago, you based on M1 trades, everything all M1 trades, 3 wins, 0 losses, 306 pips. So you were shorted the pound against the dollar, long against the dollar against the CAD, shorted Aussie USD. And see here where it's so interesting that you basically just took, if you can't, is it one of them is like in terms of 37 pips, 46 pips? Is it now part of your, as well, of your intuition or intuitiveness that if you don't like it whilst you're still ahead, do you take your profits, or you just follow your own plan and say, okay, here are the target points, and if it gets taken, gets taken. If it doesn't,
well,
just take it and...
Yeah, I'm not sure if you would agree with this. I used to do the latter. Okay, I'm just going to let it run if it's either going to hit the stop or it's going to hit the profit target or what have you. And I also sent you an email if you want to check this morning on what happened yesterday. On that one trade that stopped out, and there's one trade from this morning, I stopped out a little bit early. If I see it's losing momentum on a lower time frame chart, and I look at go to Forex Factor and look at where the dollar index is, if it's that point of resistance or supply, I may just hop out. I had 2 trades going. One made me a good deal of pips, and one was just kind of treading water for the longest time. There's no sense in just suffering. I'd rather just cut my losses there. There'll be better trades. There's other trades out there. I personally think I'm maybe a little bit over trading right now. I've done 5 trades so far this month, and I'm 5-0, and I'm going to be soon to be 6-0 as soon as the trade I have going on right now comes to conclusion.
Gotcha. So, and in other words, then back to the number 1 rule: professional traders cut your losses short, let your profits run. Then therefore as well, now part of the 3 methodology, basically you learned so far, M1, you're just following the trend, you're a trend follower. Do you then buy at a level of demand when it's an uptrending, and you sell at a level of supply in a downtrending? So how do you do it?
Yeah, I think for the longest time, we started off doing the M2s and M3s, the pattern method, and because I wanted something that's very objective, something that's black and white, and trading is never black and white, unfortunately.
Correct.
Didn't have much success with the M2s because by the time it crosses that 8 and 10, theoretically you're halfway over the move.
Correct.
50% on the way of the move. The pattern recognition helped me out, but where I was starting to fail on that was I spent all my time trying to catch falling knives. It's a big downtrend, so your stochastics are, way below 20, and there's an M2 setup. Well, do we try to go long there, or is this just a little bit of a correction before it continues the trend?
Yes.
And that's what kind of, I think in December really kind of put me on a negative attitude. Not negative attitude, that's the wrong thing, but, because all this is a learning event for me right now. So with the ESTE no-brainer method M1, after you watch a few charts, like there's certain pairs I don't trade as often. I stick to kind of 4 or 5 pairs and get to know their movements and get to learn the longer-term trend. The longer-term trend, as we all know, it has a greater strength and greater probability of continuing rather than the shorter-term time frames. There's much more noise on the shorter term than there is and vibration, I think is what you call it, on the shorter-term time frames. So what I tend to do is if there's a great trending currency, such as before, like a couple weeks ago, the yen was great trending. You know, what I would do is I'd buy on the pullbacks when it gets to the level of supply. It's a very low risk, high probability trade, and once I still do M2, but not as great. M2 was my 50, 60%er. I've scaled that down to probably 20% of my trades are M2, but I'm on a stretch with the M1 no-brainers, where you're buying at supply or selling short an area of, or buying at a level of demand and selling at a level of supply. If you lose, you're only losing a small bit. So your reward to risk ratio is very, very advantageous.
Good, exactly, and hence it's good to share once again. It proves once again that's why, in terms of trading systems have in hierarchy, oscillators always come second, and indicators like a moving average always come last, right? Part of the 50-50. There's still that from what you mentioned earlier too, that once in the 50-50 level, risk is too big, probability is also pretty small, like in terms of probability of winning, right? So awesome. So if there's anything basically that you will be able to advise people in the group, either they're intermediate or advanced or new into this, what would that be, please, Joe?
You don't need to be perfect. As a baseball analogy, you shouldn't always try to hit home runs. Singles, doubles, and triples are just fine. You shouldn't try to pick the tops. You shouldn't try to pick the bottoms. And most importantly, or maybe not most importantly, be humble. The market will humble you. So learn from those mistakes, and realize that trading is there's a lifetime of trades. So don't let one trade destroy your bankroll or destroy your attitude. And I think that's what's helped me out a little bit.
Excellent. Very, very nice. Thanks a lot, Joe. Do you have any questions from the group to Joe?
No, I don't have any questions, but it's phenomenal, Joe. Amazing. Good to see you on the top end.
Well, yeah, I credit you and Ann, I credit you and Ray for all the help there. So hopefully I'll, with my added money management, because I wasn't doing the 3% of my bankroll trades. I was just doing 3 micro lots and getting 1,500 pips on 3 lots. If I was done managing my 3 to 5% trade, that would have been much greater. So I'm starting to do that now, and I'm reaping the benefits as well.
Fantastic.
Good, because you can replicate that, you see, Jerry, right? It doesn't matter, like, in terms of what is it, 3 minis, 3 normal lots, 300 lots, right? So the process is the process, and percentage is percentage, right? The only thing that's sometimes we as traders like, oh man, it was only this amount or that amount. But if you really think into a bigger scale in terms of the process, that is what's the most important part out of trading, to be honest. Yeah, awesome. Any other questions for Joe? JP, Rick, Azam, Angie. Wow, seems like you explained it so well, Joe, that there are no questions.
Or I put him to sleep. One or the other.
No question. Awesome. All right then, guys. Well, if there are other questions, thanks a lot once again for coming in. Well, from just to recap, from Joe's as well, from what I got. Right, you're making trading as priority despite of whatever we have in life. Anything will happen anyway. Our family will come into your way. Actually, a lot of people are saying like, oh, you're already back to work. Like, aren't you going to spend time with your family? And like, hey, I love what I do. It's for me, it's a longer work or a job. It's play, right? And what's 1 hour a day? What's 2 hours a day? Like in terms of looking into a trade and talking to you guys, because it is true, we're always on a day-to-day basis. We are still going to be students of the market. After this day, on a day-to-day basis, I still learn a lot, not just from you, from students, also from the marketplace. And this is also the reason why I love trading so much, because it does humble us. Right, part of the challenge of what basically Joe stated, the same mistakes that he did raising stocks and futures, predicting the market. We cannot predict the market because prediction is now based on our own beliefs and opinions with the market. So we need to look at the objectivity of what the market is actually telling us rather than our own personal opinions. And not until we choose to change, and if we stop making excuses because too much work, families, that, blah, blah, blah. They're just excuses, reasons why not to, why you don't want to succeed. But not until you change and make it a priority, this is the only way you can go through the next level, right? So also lack of confidence. Lack of confidence is mainly just, lack of knowing, lack of skill set. Also not having the belief system, believing in the system. Not until you believe the system, then this is the only way you can gain some confidence. Didn't respect the market or didn't trade with respect. Yes, we need to respect the marketplace because at the end of the day, the market is always going to be the king. If you lose, bow down and just basically say, hey, you won today, I'm not going to fight against you, take it. Then work on what's supposed to be done in order to go to the next trade. You need to have the fire and desire. Excellent. So that comes down once again about making a priority, making it as a business. Okay, don't make it as a hobby. If you really want to make money, then be serious about it. Overanalyzing, analysis paralysis. That's also one major of the common mistakes of traders. In the marketplace, you need to look into two parts of the brain, the right side and the left side. You need to be more of a balance and harmony, not just using the left side of the brain. Taking profits too early rather than leaving the trade ride, and hence is the beauty about method one is a trend following type of methodology, buying at the level of demand, letting the trend ride, and sending a level of supply and letting the trend ride as well. Being meticulous, and hence in terms of also meticulous, it is very, very important to put into your trading checklist. Those are the key elements or the key stuff that I heard from Joe. All right. So since we're almost out of time anyway, thank you very much once again, Joe, for that. I recorded it so you can listen to it anytime, just a form of a review. If you don't have any questions for me or for Joe, then we'll wrap it up. Take care. Till next time, you guys have a great weekend. Bye, guys.
Thank you. Bye.
Thank you. Congratulations, Ray.
Oh, thanks, Joe. And for JP and Rick, Azam just had a baby boy. Cool boy.